Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be talking about supply and demand trading. Okay, we just want to look at some secrets of supply and demand trading that no one told you, right? If you have been struggling to understand why price reacts the way it does, or if you are tired of getting stopped out at the wrong levels, then this video is for you. Okay, supply and demand zones are what truly drive the market, but most traders misinterpret them or confuse them with basic support and resistance. Institutions and smart money use these zones to trap retail traders, and in this video I'm just going to show you exactly how they do it. So make sure to smash that like button, subscribe to the channel, and turn on notifications so you never miss powerful trading insights. Okay, let us get started. Now, what are supply and demand zones? Supply and demand zones are areas in the market where price reacts due to an imbalance between buyers and sellers. All right, areas on the chart where price reacts due to an imbalance between buyers and sellers. Now, these are the key areas where big institutions place their trades, right, causing strong price movements. So here is a simple way to understand them. For supply zone is where we have selling pressure, right? Supply zone is where we have selling pressure. So for supply zone, this is a price area. Supply zone is a price area where there is a large concentration of sell orders. So when price reaches this zone, it typically drops because sellers step in aggressively. Then we have the demand zone, right? Demand zone is areas where we have buying pressure. It's where buy orders are stacked, causing price to bounce upward when it reaches that level. So these zones are not the same as traditional support and resistance. What is the difference? Supply and demand zones are formed by institutional traders who move the markets with large orders, while support and resistance levels are often just psychological areas where retail traders react. All right. So how do you identify strong supply and demand zones? Now that you understand what supply and demand zones are, let us talk about how to find the strongest ones. So here's what to look out for. First of all, identify explosive moves, right? Look for strong price movements away from a zone. The more aggressive the move, the stronger the zone. All right. So look for price movements away from a zone. Okay. Then you also check for clean order blocks. If price consolidates before a big move, that area is likely a supply or demand zone. Like we can see what happened here. So there is a chance, there is a tendency that we had a demand zone around here. Okay, there is actually a tendency. Okay, then now you also have to look at how many times price returns. Now the best zones aren't tested too many times. All right, if price has bounced from a zone multiple times, it weakens the level. All right, so you want to be looking out for a zone where you had only a few bounce off that level, right? Only a few bounce off that level, so that you can still have that level as a strong one. Then use higher time frames for confirmation. Supply and demand zones drawn on 4 hours or daily charts will definitely hold more weight than those drawn on 15-minute chart or 5-minute chart. Okay, basically the higher the time frame, the stronger the analysis, right? And also combine with volume. All right, it's also important to pay attention to volumes. Okay, if a price zone is met with high volume, when price reacts, it is a strong confirmation that institutions are involved. Okay, now a lot of traders fail to use supply and demand zones correctly. Here are the most common mistakes and how to fix them. First of all, do not confuse supply and demand with support and resistance. Okay, support and resistance are horizontal levels, right? But supply and demand zones are areas of institutional orders where price reacts. Okay, secondly, do not trade weak zones. Now, just because price touched a level before does not mean that it is a strong zone. So focus on zones that had a sharp move away and haven't been tested multiple times. All right. Also, do not force zones on the chart. Okay, do not just mark random areas as supply and demand. If there was not a strong breakout, it is not a real zone. All right. And finally, do not ignore confirmation signals. Right? Never enter a trade just because price touches a supply or demand zone. All right. Always wait for confirmation like rejection wicks or engulfing patterns or volume spikes. All right. Get your confirmations before entering the trade. Okay, it is important. Now let us talk about some advanced tips to refine your supply and demand trading strategy. First of all, use multi-time frame analysis. A demand zone on a lower time frame is much stronger if it also aligns with a demand zone on the higher time frame, right? If it aligns with the demand zone on the higher time frame, it becomes even stronger. Okay, and then look for liquidity grabs. Sometimes price will fake out past a supply or demand zone before reversing. So it happens in some scenarios. Let's see if we can find one. See if we can find one example where we had a fake out only for price to reverse back in the direction of the trend. Okay, I think we had something we had something like that around here, right? You can see that price actually faked out from this zone, only for us to have a sharp reversal back into the zone, right? And then after a while, we had a significant sell trend. Okay, so look for liquidity grabs. Okay, it is an institutional trick to trap retail traders. Also, combine supply and demand with other indicators. Okay, you can add your volumes indicator. You can also decide to add moving averages, and do not forget to use trend lines. Okay, trend lines are very helpful. All right, use your trend lines. Connect your highs and your lows. Right, identify market structure. Pay attention to chart patterns and your candlestick patterns as well. And also be patient and let price come to you. Instead of chasing price, set alerts at key supply and demand zones and wait for confirmation before entering a trade. And there you have it, the supply and demand secrets no one told you. Now you know exactly how to identify supply and demand zones, how institutions use them, and how to avoid the biggest mistakes traders make. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss the next powerful trading strategy. Also, let me know in the comments, do you use supply and demand zones in your trading? Have they helped you improve your entries? Drop your thoughts below and I'll see you in the next video.